Hey guys, Boris, I'm BK Forex. Welcome to our fourth day techniques for 11/27/13. As always, trading foreign exchange on margin carries a high level risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks of trading margin. With the secret advice from a financial advisor if you have any doubts. Well, interesting day today. I think surprising to many people here in a sense that we had a pretty strong anti-dollar rally today, especially in the high betas with euro really coming back and recovering the 35.50 level, closing near the day's highs. We're now sitting at a very critical juncture, and of course, temptation is going to be very, very strong to want to run the 36 stops, but at the same time, it's also at a point where you have a lot of resistance. So there's going to be, I think, a pretty serious battle between the bulls and the bears here. But if we can tip it over into the 80s, the run towards the 3600s, I think, becomes a lot stronger possibility. I would actually flip the euro chart to a much more positive structure because it would then you would still have the resistance at 3650, which is a key resistance to overcome, but it would really become much less of a distribution chart and much more of a basing chart for a potential move higher. So very much worth watching. Certainly, the 36 is going to be the big figure in mind on the top side. To the bottom, 35 remains the key hold, and that's been the big support for the last 2 or 3 days. If they flip things around and they start pushing it towards the 35s, if that doesn't hold, then we have a much more negative construct. We basically have a double top here, and then we have potential distribution all the way out to 3400s. Dollar yen, on the other hand, failed pretty badly at the 102 level, kind of flamed out, and it still remains a little bit under pressure. I think, given the technical formation, there's a lot of pressure here to try to want to push it towards the 101 level to see if you can test the stops over there. If it kind of finds a little bit of support here and begins to recapture its recent strength, then the takeout of the 102s would really make it a much more bullish structure, because that would suggest that we just basically had a pause and a move above 102s really puts us up into a run towards the 103, 103.50s. But for now, pause and a correction is much more likely scenario, especially given the fact that this high has not been penetrated. And we haven't really had a lot of momentum to take it to the upside. If they start pressing the downside here, it's very, very likely they're going to test the 101 support, and then from there, of course, the really, really big support is the 100. So we'll have to see how that develops. But yen looks to be corrected for the time being, and cable looks quite strong. Also, really recovered a lot of its yesterday's losses. Not quite the full recovery here. It needs to really take out 62.50s. If it does that, it puts it into a very, very productive structure, basically right at the swing highs of the year. And everybody who thought this was a triple top is going to get very badly rolled on a short squeeze. So cable is setting itself up for a short squeeze. The question is, it's just going to be, are the long going to have enough firepower here to push it through? Because if they can, then the roll here could really come up to all the way 63.50, maybe even 6400 before the upside exhausts itself. And lastly, the Aussie is kind of hanging out. This 91 level did bring a little bit of support here. 91 was a big support level a while back. It held a little bit over here. It was a resistance that became support over here, and now seems to be basing here. What I find interesting about the Aussie is that, yes, there's a lot of very negative flow against it. It certainly is looking like a sell more than a buy, but unless you can take out the lows here, and really unless you can sort of bring it all the way out to 90.50, it looks to be more like a bounce than it does a sell at this point, because most of the sells, there's been so much selling already going on that there's clearly a little bit of bargain hunting coming in here. At the same time, if you're looking at Aussie on the crosses, the interesting thing here is that Euro Aussie, which looks to be like a pure straight up shot to the upside, nevertheless could fail again here at this 150 level. So it's worth watching this as well. A turn in the Aussie and a slowdown in the Euro could really create a very quick return back to the 4800s. On the other hand, if we start pushing through here and Euro takes out the 150, then you have a completely different structure. You have basically full rain ahead. We could see maybe 152. The Aussie then goes down to 88, and whatever bargain hunting you see here is just going to get rolled over. Bottom line is, if 90 does not hold, or sort of 90.85 does not hold, then we have a much deeper correction in the Aussie. So far, as long as that level holds, we may have a little bit of a bounce here all the way back up to 92, which is the resistance level that we see here. That's it for this week. There's a holiday coming up for the rest of the week in North America, so we'll be out. I'm wishing you guys the best of luck and the best of trading. This is Boris Losberg, over and out.